Mike, welcome back to Real Vision.
Thank you, Ash. Great to be here.
It's a pleasure to have you. You were recently on Real Vision with Raul last month. For those of you who haven't seen the interview yet, I highly recommend it. It tells the story of your journey. Obviously, you've had one of the most storied careers in the Valley. Serial entrepreneur, you worked at Netscape and Google, sold a company to Microsoft, and of course, you are one of the principal authors of the HTTP 2.0 specification. And today, we're going to talk a little bit about BitGo. And about the custody business and why it's so incredibly important to the space, especially on the institutional side. So if you could, Mike, give us a little bit of a sense, 50,000 foot, about what BitGo does.
Sure. Well, thanks again, Ash. Always good to be here and share more about kind of what we're trying to do. So in the last 6 months or so, BitGo's really emerged as kind of a digital asset powerhouse. We're one of the largest, digital asset, crypto, Bitcoin financial service firms in the world. We're up to over 40 billion in assets under custody today. Obviously, we've had strong tailwinds with price appreciation this year, but it's more than that. It's real new clients coming into play. When we started a few years ago, we were very much solving a software and a technical problem. And like a lot of things with software, once software starts to invade a space or field, it starts to take over. And, I like to quote Mark Andreessen's software is eating the world. Software is absolutely eating financial services today.
Yeah.
BitGo has been kind of a classic, story kind of in that line. And what started out as a need for, large holders, which gravitated towards high net worth individuals and then, businesses that were participating in digital assets has now grown into, okay, how do fiduciaries participate? How do we build a market structure? The institutional side of any market expects a pretty mature, robust set of, compliance rules, policy rules, safety guards, et cetera. And we've been building that over the last 10 years. So I think custody emerged kind of on the scene as a big thing, really only about 4 years ago. And this was with the first applications that were happening for ETFs, where SEC started saying, hey, wait a minute, do we have custody established with mature enough players that it's really ready for institutions that are going to be carrying a lot of this on behalf of, ultimately investors? Of course, it's been pivotal. It's been a question ever since. A number of companies are chasing that. I think BitGo is actually the only company that was around all the way back in 2013, focused exclusively on kind of that institutional component. And so anyway, we've evolved as is needed to build a very highly, compliant, regulatory safe, security safe set of products and services to carry, institutions into the market.
Yeah. So, Mike, what's the current state of play right now for institutions who want to invest in the digital asset space? Obviously, they do audits. They have a whole series of needs. They have operations committees that review risks when they want to invest in these spaces. What's the current state of play there?
Well, you actually hit on a lot of it. There's a lot of due diligence still that is occurring. We're seeing a different field, though, than what we saw in 2017. So the institutions first came knocking in 2017 during that kind of big run up. Of course, in order for any incumbent financial institution to be interested in digital assets, they've got to see a level of risk and reward that has some balance to it, right? And if the market's too small, the reward side's too small, and yet the risk is very high from their perceived view of it. So back in 2017, when they came to look at the space, they were kind of surprised. They did not see a market structure that they expected. They saw a lot of counterparty risk. And of course, this is in addition to market risk that they know how to deal with reasonably well. And then, compliance and regulatory risk, which they were still learning. So a lot of the institutions that came in 2017 kicked the tires and decided not to participate are now back. But it's a different world, right? We've got the backdrop of coronavirus, which of course is changing, the macro view of the world. But also the companies like BitGo have been continuing to hammer forward. And so we've built tremendously since then. The insurance backstops are better. The security is better. The regulatory frameworks are better. The size of the company is more in line of what they would expect to see. Our balance sheet is stronger. So as they look around to find a good way to participate, they're seeing that. And that's why we're seeing the uptick on the institutional side right now.
Yeah. And talking to that point, let's talk a little bit about prime services. Obviously, institutions have different needs than retail investors. Tell us a little bit about what the significance of prime services are for people who may not be familiar with the space.
When we first started talking about BitGo evolving towards prime brokerage back, 2017 or 18 internally, I started using that term. And it's a broad term. On the financial services side, when people think of prime brokerages, they're thinking of Morgan Stanley, they're thinking of Goldman Sachs. And this is a huge set of products and services. It's got a deep capital balance sheet to help you kind of enter the market in a number of different ways. So the Wall Street side back in that era was saying like, I know prime brokerage and you ain't no prime brokerage, right? And so it kind of got that reaction. And then on the Silicon Valley or the more technology side, they're like, what's prime brokerage? So there's been kind of a merging of worlds here as software does start to move into it. But when we break it down, we've got kind of three basic components. At the core, actually, you need to have really solid custody. In other asset classes, you don't worry about the asset disappearing from underneath you. You don't worry about your Apple stock just not being there. There's ways to ensure that it's protected in a system and all the way down to the DTCC that's well known. B, access to deep, legitimate liquidity. So remember, we've got a fair amount of liquidity in Bitcoin, the other assets a little less so. But moreover, which of those liquidity pools are reachable by major institutions in the United States? Can they do trades at a Binance, et cetera? All right. So having deep access to bona fide liquidity is really important. Third thing is leverage or lending. In pretty much prime brokerage is about helping usually hedge funds, right? Enter into the market in a way that makes sense for what they're trying to do. This takes a lot of understanding of what are their goals, what are the implications of the different ways that they get in the market, whether it's derivatives markets or being long, et cetera, tax implications behind it as well. So a prime broker can service a lot of creative and flexible ways that hedge funds can enter the market. And hedge funds are usually operating at a very large scale compared to like where Bitcoin was in the last few years.
Yeah, it's so interesting. One of the things that you mentioned at the very beginning was this notion that you basically have this marriage between the tech side and the financial side, and you're groups of people who speak very different languages. And the custody services business, as the institutional business matures, is something that's very much at the union of those two places.
For sure. So anybody that looks at kind of the traditional Wall Street systems, and I don't mean to diss them too much, but it's not where you think of like really good technology being applied. Yeah. These are systems that were grown over decades from pre-computer era at all, and they've evolved. And an obvious example of how different the software world is from the markets is just hours of operation, right? I mean, the markets have got their time. You get 9 to 4, Eastern time, and that's your world. And after that, everybody goes home. Crypto markets run 24/7. Look, if you're going to run 24/7, you got to change your plumbing. You can't take your systems down. They have to be fault tolerant, reliable, 24 hours a day across geographies, et cetera. So the bar for crypto, by being software-based, ultimately is much higher than what we've seen in the past. And that's just a simple example, right? I mean, other things around, it wasn't that long ago that, you didn't even have decimal precision for stocks that you could purchase. Of course, with crypto, we've got to the 100 millionth place in Bitcoin. And in Ethereum, it's even in a deeper number, 256-bit number. So, just the decimal precision type of technology also comes into play. But then we're starting to talk about more interesting things like what's going on with DeFi markets, et cetera. We're able to take some of the algorithms that previously were proprietary and hidden behind institutional walls, and now they can be put out in smart contracts. They can be audited, they can be seen, they can be reviewed. By the way, ultimately, this is going to lead to a huge security boost for the DeFi and crypto markets, because we're going to have security and peer reviews of all of this activity. that's never been doable before when it was proprietary systems in the backend. So anyway, whether you're talking about efficiency in that we don't have disparate system across different prime brokerages, each with their own set of bugs and inefficiencies, or whether you're talking about transparency and the fact that it's all on chain and you can actually see the smart contracts, the world is changing towards software. And Silicon Valley has been, where you classically see a tremendous amount of innovation. Obviously, there's a big talk about whether Silicon Valley retains its dominance as the technology hub of the world. I think that's changing. But my point is, there's still software innovation happening at unprecedented levels. And by the way, in financial services markets, because there's been such a lack of technology innovations over the last 30 years, while the rest of software markets have really evolved, it's changing at a rate I think we haven't seen really in any other sector ever before. So, that's why we see thousands of coins, thousands of different types of opportunities here. It's a global financial system that's emerging, and it's changing super fast.
Hey, if you like this clip, be sure to like and subscribe for more crypto-related content. Also, be sure to check out the full interview and more only on realvision.com/crypto.